guys, welcome to this other class. We'll be looking at external and internal structure on this, and I would like to break it down as much as possible, even though I would not want this class to be long as well, but I would like to break it down as much as possible. External and internal structure. Now, the whole market structure that we've been looking at, we've been trying to break down this topic because once you understand how the structure of the market is, there is no limit to what you can achieve with trading, because you can build from there actually and grow your knowledge. Okay, and I would ensure that I keep laying emphasis on structure. So now I want to go into external and internal structure. So the external structure would be the bigger time frames, while the internal structure is actually the smaller time frame. So I'm going to use some of the diagrams that we had on from the other classes to explain a little bit about external structure. So let us assume this is the weekly time frame. Okay, let us assume this is the weekly time frame. The weekly time frame. This is the weekly time frame. The weekly time frame doesn't carry so much information, right? If you want to be more of a smart money trader, you don't necessarily need to be looking at a lot of candles on the weekly time frame, right? You don't necessarily have to. Let us quickly go to the weekly time frame on GU. You really don't have to be looking at so many information on the weekly time frame. All you just need is possibly information of the last two candles. Okay, information of the last two candles. I think I should go to a different pair entirely. The information you literally need is the information of the last 2 or 3 candles, or to 4 candles. That's all you need, right? So let me give you an example of what I mean. So right now we know that the market is on an uptrend here, and you can see it doing a little bit of range around here. So now that you know that it's doing a little bit of range, all you can see is, okay, what is the market doing in the last 3 to 4 weeks, right? That is what you want to just notice. Okay, so the market is trying to pull back. It's giving us break of structures around here. It has created this high, low, high, low, high, low, high, and then it broke these lows, and then came to break this low, and then came to break this low. So it is telling us that we might be seeing some sales coming through very soon, right? So, but that does not give you entry to any trade. It does not give you insight to the trades you'll be entering. Because, okay, if we say we are going to be seeing sales, does that mean you just go and enter a sale from here and put your stop loss up over here? Yeah, definitely not. That's a lot of pips, 3,000 pips, right? That's a lot of pips. You don't want to just do that, only if you have a lot of money to spend. Okay, so you actually want to, because it will take weeks to get back to this down path, which it might not. Okay, so now that you have seen information, it might just give you an insight to what you are looking for. Basically, an insight to what you are looking for. And this is like the bigger structure of the market. Okay, so what is the market doing with this big structure? This must have been a very old analysis. You know, so what is the bigger structure here? The bigger structure is it's on an uptrend, and it has shown us signs of breaking structure to the downside. One right here, break of structure. One, this very short low here, it broke this low, and then it finally broke this low as well. So breaking these 3 lows is very significant to show that we have multiple break of structures to the downside on the lower time frame. Still, it still went back up, and it didn't break these highs here. So definitely we might be looking at selling, because this is an imbalance. So it might want to sell back down to this point to fill up that imbalance that the market has created here. So yes, next you go back to your daily time frame now. You want to see what has been happening in the last 7 days on that note. So yeah, we're seeing some sales back to all of these points, at least to our area of demand right here, right? And we're seeing some sales back to that point. Now, this is how you are looking at the structure. If you are looking at the monthly time frame as well, you are looking at just the last 3 candles. You have no business looking at the whole structure, really. You just need to look at the whole structure to know the bias, whether it's hot or going up or coming down. But it does not give you any insight to where you are going to be taking your trade, or how the market is going to be reacting to you in whatsoever way. All right. So So having said that, this is a daily time frame now. Now we are sure that the market is most likely to sell. Then you can start drawing every line you want to draw, your support, your resistance, your trend line, and all of that if you have the time for it. And then you can start waiting for all that. But it's not necessary because you won't be taking trades off the daily time frame for sure. You definitely won't be taking trades off the daily time frame. So next, you go down to the internal structures where the 4 hours time frame will start giving you more information. And as you can see, there is an order block here on the 4-hour time frame. So most likely, if the market is going to give us some sell signals, then it's going to be selling right down to this point. And if you are the type that don't, since the market is looking more, still looking bullish, very, very, very bullish, even though this is a sell on the 4-hour time frame here, this is a sell like right here, this is a sell, this is a sell. No, that's not it. This violated the trend line here, broke through. This is a sell. This looks like a sell. Still, I can still be bullish from this order block, right? And I still look at this order block and still be very bullish. Why? Because it didn't break through at this point. The market didn't break through at this point. There is no break around that point. The market didn't break below these lows. Didn't break below the lows. So yes, I might still be very bullish from this point. Okay. So I see very bullish from this point. So yeah, that is the external structure. You are just looking at the buyers and you're looking at the last few candles to see what the market is really going to do, right? So what we saw was quite pure and plain. Looking at that imbalance on the weekly time frame, straight to the daily time frame, and now on the 4-hour time frame, we see an order block that the market is most likely going to run to before actually moving back up. Okay, so let me go back to GU because I want to show you something there. I actually want to show you something there. Okay, this market actually came into this thing and respected it. So back to GU, we're on the 1-hour time frame. Right here, we've still not gotten that entry. This is a long-term hold. So some things happen on those external structure that you have to watch out for. So let me come back here and undo some things. Let me see if it will take me back. It's actually taking me back. So let me change this one to the 4-hour time frame now. I'm explaining like I am doing my own analysis. That's the best way to let you guys understand what I am saying. So let us assume this is the 4-hour time frame now, which as intraday traders now will now be our new external structure because we can't be waiting for weekly, right? Weekly has shown us the whole buyers of the market. So 4-hour time frame as a day trader now shows our external structure. We have an order block here that looks good, right? Another block that has given us everything another block should have. Like we mentioned in the last class, it should have imbalance, it should be engulfed, it should have change of character before that order block most of the time. Yes, if you see that better, the order block should also lead to a break of structure, very important, lead to a break of structure, most likely more than one break of structure, but those are the things that make another order block very, very valid. Okay, at least some of the things. And then sometimes after that, it creates liquidity that we will explain in another video. Okay, so now we start scaling down to the 1-hour time frame, 30 minutes time frame, and 15 minutes time frame. So now on the 15 minutes time frame, the order block is still there from the 4-hour time frame. So now let us go into that internal structure of the 15 minutes time frame to see what I actually mean. So here we are. Before I go here, you can see this thing I explained here. Thought I will now show you into a little bit of details at this point. So let's have a look. Okay, so this happens, right? The market moves up, creates higher lows, higher highs, higher lows, higher highs, and breaks this structure. All right. So we have our break of structure. It comes down. It doesn't just run off to break off the next structure like we've all been taught, like this simple one. Now it creates a level of ranging markets around this point, around a point below, above or below an order block level that's created, or an area of interest, right? On the 4-hour time frame, this must have been the order block we've created, you know, that has reached, and yes, we are now watching it on the 15 minutes time frame. So it moves up, creates a lot of liquidity spots like this, equal lows, triple bottoms, and all that. So it creates all that, right, and finds a way to take it out. Now, when you see the other block like this, you have your imbalance around here, it breaks your structure, you know, it engulfs too, and then it starts coming down, forms all of this, creates a liquidity, it induces the other block or the imbalance, right? It also sometimes will create another other block right at the top there, which is most likely going to take, that's what I'm showing you on this internal structure now. I'm going to take that other block, come right back down to mitigate the main other block that we had seen right from the 4-hour time frame here, right? So that's the imbalance that it has created. It has come here to fill up those imbalances now, to take up this other block at the top, run straight right down to mitigate this other block at the bottom before finally going. However, you don't just enter off the 15 minutes time frame right here. No, as you can see, I want to now show you what happened around this spot in the 1 minute time frame, or most likely 1 minute, 3 minutes, or 5 minutes time frame. Now, as soon as the market comes into this other block right here, this is it right here, comes into the other block, creates a change of character. Creates a change of character. Sorry about the noise. Creates a change of character around here, breaks below and breaks above almost immediately. That's our change of character, right? When we have break below, break above, or break above, break below immediately. So it breaks below because it's coming down. So like a downtrend now, it will look like a whole downtrend on the 1 minute or lower time frames, right? So it comes down like that, breaks below, gives all that break of structure below, and then immediately breaks above the highs of the lows, creating another other block right there on the 1 minute time frame. That is where we now pick our entry from, giving us very better risk to reward. So if you are taking your trade from here, possibly you would have had bigger stop loss. Yes, you would have had bigger stop losses, and then taking the trade on the 1 minute time frame will give you better risk to reward because your stop loss will be little, and you can use better lot sizes and target better profits. All right, so that is the way the internal structure really works, and that will now lead us into the market. Let us go and have a look at how we break it down from 4-hour time frame. So look for an older part of the chart, and then we work with it, and I'll just give you a little rundown of how it actually works. So let us look at EURJPY. So this is EURJPY right here on the 4-hour time frame. So I just want to look for a POI. A POI is called a point of interest. All right, so let us just quickly look for a very good POI that was mitigated nicely. That was mitigated nicely. I'm going to just have a look at that block that was mitigated nicely. Okay. Give me a moment. Give me a moment. It's been a rally. This has been a rally. This has been a rally. Like despair. So, give me a second. I have to get it right. So I'll show you. See. Okay. So let me use this. Okay, so on this is a 4-hour time frame. So it creates this other block right here, creates this other block at the bottom right here. Let me mark it up. Right here, create the other block. Okay, and then rallies up and then gives us that break of structure. One comes down, it came to mitigate already. So yeah, gives us that break of structure on the 4-hour time frame. So what do? You are going, let's run down to the 15 minutes time frame now, and see, run it down to smaller time frames and see if the other block still stands. Okay, so let me mark that again. So that's the other block. So forget that any other thing happened after the other block. Okay, just forget that anything happened after the other block. We just want to work with this other block right here. So go down to the 1 hour time frame. Let's have a good look at it and see if the other block is still on the 1 hour time frame. Most of the time, I look out for the other block maintaining itself on other time frames. Very important, because yeah, that's what actually gives me that rundown to enjoy the analysis. So when that other block is still there, right here, you can see it on the 1 hour time frame. The other block is still right there, That's the other block, right? And it's glaring now, more glaring now that we formed our as the other block formed, gave us the imbalance immediately and broke the structure right there, broke the structure right here, broke the structure, telling us that okay, I won't go low anymore. I'm breaking that structure. So let's see how it goes. So yes, it happens, and the 1 hour time frame gives us that. Now, some other people would have just waited and prepared to take the trade right from the top of that POI zone and used like 15 pips stop loss, which would have still been cool, right? And targeted, let me see, these highs here. So that would be about 100 pips thereabouts, right? Easy 100 pips, and went straight to the move. But we are looking at the internal structure. So yes, let us now go to the 15 minutes time frame and see if that other block still actually stands on the 15 minutes time frame. So we'll look for our area of interest where we are actually analyzing. So I'm just going to look for that. This thing wants to see it. No. Let me go back to the 30 minutes time frame and see if we have a better view from there. Still the same. Okay, right here. Let's see if the other block is still actually on the 30 minutes time frame before we scale down to the 15 minutes then. And I believe it's still here. And that is the other block, still there. That is the other block, still there. The initial candle is right there. I'm going to zoom that out. And as you can see, there's the other block there, even though a bullish candle tried to form. Now, finally on the 15 minutes time frame, because that is where I want to actually explain that structure that I drew on and I showed you guys on the other part. Okay, I want to now explain that part very well. I hope this thing moves. Very important you move now. Please, very important you move now. Okay, I think the network is really crazy and it's not trying to load this data. Oh my God. Okay, the data isn't loading and this is really bad. Okay, so let's look for another spot on another pair entirely. Okay, so I'm going to the 4 hour time frame. It's expedient that I'm explaining these things like this so you understand my own standpoint when I'm trying to analyze the market. Okay, so I'm just going to use this analysis I did here. Hopefully, let me see. Hopefully, we don't get hooked up again. Okay, hopefully we don't get hooked up again. Now, most of the time, these things require just patience. Okay, they require just patience most of the time. All it requires is patience. And once you have that patience, boom, you are ready to start hitting the market back to back. Okay, so let me delete everything I have here and then do the analysis right from there. Okay, so the market creates another block here for us. 3rd of January. So the market creates an order block here on the 4 hour time frame and immediately creates this imbalance that the market comes to feel. And if you are sharp enough, you would have cut this imbalance. At least it would have given you, let me see, you would have taken maybe 20, 30 pips, right? So the market creates this. Let us assume nothing else happens in all of these places. So we go to the 1 hour time frame and we look at that area if our order block is still very potent. Okay, so as you can see, we still have our very potent order block right there, still there, right there. So it shows that the order block is a valid one, right? And the order block actually runs through to break structure, right? So there is a church and that's change of character, which happened like quickly, change of character right here, and then it breaks this structure below to change of character, right? The market has been coming down, keep doing breaks of structure, moving up, higher highs, higher lows. That is one major thing. It keeps coming down, you know, lows, highs, lows, highs, lows, highs, lows, highs, lows, highs, you know, creates the low, creates the high, you know, creates this low, and creates this high, breaks, and then breaks. So this is our church right here, right here. It breaks up here, breaks down here. That is our church, right? And starts showing signs of weakness, that it can't break the lows anymore. So that is one thing that you'll be seeing more likely. So with that, let us see if this order block is still on the 30 minutes time frame. We've seen our church, which is right here. Most times I just label the church with the, when it breaks the second part. I see the first break and the second break is where I used to label my church. I just label here break of structure and label here church. Change of character. Shows that it has changed character entirely, right? It has changed character. So I see that change of character showing me that, okay, this change of character doesn't mean that it is going to be a bullish move. It's just showing me that this downtrend is still valid. It is breaking structures back to the downside and not trying to create new highs, right? So it gave me that break of structure on that change of character, because it tried to be bullish here, like break above, come, break above, come, break above, and break below. That is what it did here. After breaking a series of lower lows and lower highs, after a series of lower lows and lower highs, lower lows, you see it. It started doing this break above. It broke above these points right here. Okay, so let me label that again. It might look it to be confusing to some people. So it breaks, because it is very tight, you will not really see it. Breaks below, breaks up, breaks up, breaks up, breaks by week, up, breaks by week or equal lows, up, breaks below, and then breaks above. And see now, you can now quickly see that break of structure happen right there. That's a break of structure. So there are lots of information. There just feels like one candles just keep forming to the downside, but yes, it's a series of higher lows and lower highs and lower lows, right? So it breaks above and then breaks below, breaks above, and then fails to break below right here, and then fails to break below, breaks above, doesn't break above, and then it breaks below, right? Breaks below, breaks above everything. That is the first break, and then comes right down to break below, telling us that, okay, this series of higher high, higher low, higher high is not going to work. So it breaks above, creating a new higher highs, and breaks below to show that the character has changed from what it's trying to form here back to what it has been, to an existing lower movement. So it moves this. So if the next upward movement doesn't break above this, then yes, it is a lower, it keeps going low, all right? Keeps going low, extremely low as it would, right? So it does that, and then the market, now we are seeing this. So I want to, and it creates, that church creates an order block there for us, right? Although this week came to mitigate it, but it's still a very strong one, because 4 hour time frame showed it. The 1 hour time frame still shows it. So let us go 30 minutes time frame and see if our order block is still very much valid on the 30 minutes time frame. Hopefully we don't get ratted out again. Okay. It's still right there. This is the institutional candle right there. Although it created that moon, what they call that candle pattern, candlestick pattern. I've actually forgotten those candlestick patterns. Right here, it's still right there. That's its candle with this one engulfing it, this one engulfing it, right? So 15 minutes time frame is where I actually look out for mostly. So let us hope we are not going to be routed out again on 15 minutes time frame like like the last pair. Oh great, we are not routed out. We are not being routed out. So yes, and as you can see, the 15 minutes time frame gives us that order block in plain sight right there. That's the order block on 15 minutes time frame. The institutional account, very little there. You can see it's very little there. And as you can see, the market has not come to mitigate it on the 15 minutes time frame. I like getting my main order blocks on the 15 minutes time frame. So it gets that, picks that from there, and that is it. That is where we're looking at. So back to the structure that we showed. The order block is showing, and now we are waiting for the market to create. It came right down, broke the structure, right? This is the other block that actually created this break of structure, although this is one other block right here. This one other block right here. But since that top one has not been mitigated, so when I say mitigated, I mean it has not been taken, okay? No candle has entered into it yet, so it's still a valid one. The market might come into this one and fall, which it never really do, right? A lot of people, but that's the other break of structure. So next thing is to start looking for areas of equal highs and equal lows that the market would actually create to take. So it comes here and fills up imbalance and then falls and then starts creating areas of equal highs and equal lows around there. These are areas of liquidity. These are areas of liquidity right there. Now it's doing all that to get a lot of people into the market and take them out eventually, so it can mitigate this point. All right. So it comes and creates equal highs and equal lows, which eventually it's still going to take out. Right, and as it's forming this above, it's also forming some equal lows below to take out. And as you can see right here, that's taking it out. So people that will be trading this trend line, this little trend line 15 minutes time frame, will be taken out. And right there, it keeps going for a very long time on sideways movement. Takes a lot of people out of this trade, and here we are. The market comes into this point. Now this is our next area now I'm just going to markets. So this is our OB. The market has come into our order block, right? You don't just take that trade off the order block. And that is one thing I like to explain with internal structures, right? In the internal structure, as you can see, the market has created all this area of equal highs. Obviously, came here to take it out, as I have always thought, took it out immediately, took it out. So hit a lot of people's stop loss. You say, people have made a lot of money. Some people don't trade like you. People trade in ways that you don't understand. You're not the only one in the world. So this guy has taken everybody out and immediately falls right back down. So people are scared. People are angry at this point. Like, come on now, what the fuck? I have had my entry around here. I've had my entry here since, with my stop loss just right above it, waiting for the market to fall since. And the market has been dancing and dancing and dancing and dancing. And then it comes, takes them out. Because most of the time, as the market has done all of this, a lot of people wait for the market to get to their TP, right? And immediately they put their stop loss, or they reduce their stop loss or put it at entry. Yeah. So a lot of people don't want to put their stop loss above this previous level up here. A lot of people won't want to do that, right? So their stop loss will just be a little bit above this point, just a little bit above this point. And that is what the market did, took them out. If you want to use this last structure, that is where your stop loss will be, and it will just take you out, right? Before and run straight to your TP. That is what it did, took out. Let me clean that out. The equal highs have been taken right there, and then creates imbalance, moves, takes everything, and then comes into our other block on the 15 minutes time frame again. Now that is what I must have been waiting for the market to come back into our other block. So yes, let's mark this point now. This is our other block. So I'm going to the 1 minute time frame to now see the creation of new areas that the market will take, and how it now can see how it fell right back down. So let us go to 3 minutes time frame and arrange it from there. I hope whoever is watching this right now is grasping a whole lot of things from this. Oh my God, I hope this 1 minute time frame does not rat us out this time. So let us just refresh this page. Very important. All right, guys. So I've gone to the 3 minutes and the 1 minute time frame, and it's not loading up to this data. I even had to subscribe for the premium. It gave me $1, but when I was about to pay, it actually took the whole almost $200, and it still didn't load up to this data. So yeah, actually there is something that must have happened in the 1 minute time frame that is not showing on the 15 minutes time frame, and I really wish it actually loaded up to this point, so we would have seen it closely. Now the market came into our area of interest like this and broke above. Now if you waited, you would have actually seen how it did. Now on the 1 minute time frame, it will actually, you will see something like this. It will run in, come down, run up, create that church, of course, create that church and create it like this, move up to another block right there, take it, most likely create a church again, and come here, take it again. And that is what you are seeing here, created that imbalance right here after taking the order up there, right there. So there are two things involved. Most likely, it must have come and created a new order block at the top. You can see it on the 15 minutes time frame that there is a little order block there. So most very likely another block must have been created at that top on the 1 minute time frame. And that is where, as this imbalanced candle, this very candle from this imbalance formed, that is the candle that has come to mitigate that short order block that must have happened above our level. So a lot of people would have entered there, maybe with tiny stop loss would have been taken out. However, we that waited on and checked our 3 minutes, 1 minute time frame would have had the chance to take the trade right from the teeth, and cut the whole movement to the downside right there. That whole movement to the downside, all of this to the downside. Okay, so basically that is how the internal structure is. The internal structure consists of the market creating OBs, order blocks, and creating liquidity for itself to lure people into the trade and take them out. Even if it's by a week, like I explained in previous videos, even if it's by a week, it will actually come back and take a lot of people out. Okay, so most data didn't load, and that was quite unfortunate. Most data didn't load, and that really got me really, really sad. Okay, most data didn't load. And with this method, you don't need to watch you don't need to target the major moves. You can just get 20 pips and you'll be very sure of that 20 pips. And that is what I want us to quickly look for and analyze. And I will do that in another video just for analysis of this internal structure. Cheers, guys.